So everyone, I'm really excited to speak to you. What I hope you'll learn during my presentation is how to have your assets protected, how to protect them from a tax standpoint, how to protect them from an asset protection standpoint, and how to protect them from the IRS, from an audit reduction standpoint. So let's get ready and move along. Hello, my name is Bill Knoll. I'm an attorney and CPA. The materials that we're going to be discussing were created by my dear late departed friend Al Ayala and myself. And I want to thank you for joining us. We are here to talk about you as a real estate investor. And as a real estate investor, you want to have a program in place of asset protection designed specifically and only for you as a real estate investor, and not for someone who does other forms of business. We want you to have total protection. We want you to learn how to avoid adverse, that's negative tax results. We want you to learn how to avoid high IRS audit risk. And we also want to avoid complexity while also not having to deal with high-cost attorneys. In essence, we're going to give you a program with no bad side effects. So we're going to now teach you. This is a combined educational program with proven legal forms to support your tax-saving strategies of you being a real estate investor while dramatically reducing the chances of being audited by the IRS. So welcome to our program, the LLC Master Machine Asset Protection System. I'm going to teach you how to be protected from wrongful creditors, from money-hungry lawyers, from expensive lawsuits, from expensive disagreements with partners, and from the worst vulture of all, the IRS. I'm going to teach you how to do these things while avoiding expensive lawyers. I'm going to show you how to make the legal system work in your favor by understanding how it operates. So I'm Bill Knoll. Why should you listen to me? Well, I happen to be an attorney and a CPA. I maintain both of those licenses still to this day. I'm a national speaker. I happen to be a landlord, an investor, and a property manager. As far as my professional experience goes, I began working at the CPA firm founded by my father in the 1980s. After graduating and getting an undergraduate degree in accounting, I went to law school, and upon graduating from law school, I worked as a prosecuting attorney in a district attorney's office. Following many years working in that office, I became a partner in a law practice where I handled all forms of litigation. I did contingency fee, we get money for you litigation. I handled workers' compensation. I handled a lot of criminal defense. I handled divorce work. I handled really commercial litigation, but business disputes between people in a contract. I was also regarded enough to be able to specially appointed to handle defense of people in very complex, high-profile cases such as RICO and drug conspiracies. But for the last 15 years, I've limited my practice really to what we call tax compliance. That means we file tax returns and business entity structuring. These days, the only court I go to is the United States Tax Court. So before we really get into the weeds, I want to tell you about the important things that exist for you as a real estate investor, giving you the ability to legally minimize your taxes. And, I want to point out to you that these rules have been in place for over 40 years. They really haven't changed in the past 40 years. But the things that are critical for you to understand how to dramatically reduce the taxes that are owed as a real estate investor are these things. First, the fact that you can increase or maximize your depreciation using a strategy we call componentization, or can also be referred to as cost segregation analysis. Next, the fact that you can avoid the passive loss limits that are imposed by establishing that you are a real estate professional. With that status, you no longer are limited by the passive loss limits. Next, when you're selling property, you have to classify yourself as either an investor or a dealer. The taxes are calculated differently for those types of circumstances. So the analysis of whether you're an investor or dealer has not changed for the last 40 years. Next, the fact that you can use a 1031 exchange to basically sell a property and buy a replacement property and never pay any taxes due. Again, that law has been in place for 70 years, and at one point there was talk of disallowing it, but that never occurred. Next, the stepped-up basis of death rule. What that means is upon your death, your heirs take your property, whether through inheritance or trust or whatever the case may be, and they get what's called the stepped-up basis rule. So what that means is when they inherit the property at the fair market value on the date of death, and therefore your family can basically avoid the imposition of tax on the non-capital gains that otherwise would have occurred. Next, the fact that there remains preferential long-term capital gains rates, meaning you pay a lower tax rate on capital gains rates when you hold an asset for more than 1 year. And lastly, the fact that rental income and capital gains income are not subject to self-employment tax. There's also a huge gift to real estate owners and other business owners of what are called pass-throughs. Pass-throughs are LLCs, which are owned by one person, LLCs taxed as a partnership, or S corporations, whether an LLC or not. So there's a new section called Section 199A, Qualified Business Income Deduction. It creates an additional deduction for your pass-through income from your entity. In a very short manner, you hope to be able to take an additional 20% deduction from your pass-through. It's subject to a lot of permutations, alterations, and phase-outs, but for your purposes to understand this, if you had a business that had $100,000 worth of income passing through to you from either a partnership or an S corporation, you would be entitled to take a 20% deduction of that amount. It's called the qualified business income deduction, so that you would only be taxed on $80,000 of income. That $20,000 would not have any tax imposed. So that is the huge gift to business owners, pass-through owners, real estate investors. So as I said already in my simplified example, if you have $100,000 of income, you're going to get a $20,000 deduction. Don't get too hung up on this. Just be aware that utilizing our documents and our materials, you'll be eligible to pursue this strategy. Don't get hung up on the details right now. Ultimately, this was done as a way to try to equalize the fact that corporations, C corporations, now have a 21% tax rate, and they didn't want individuals with pass-through income to have a dramatically higher tax rate. The fact of the matter is, the vast majority of small business owners are going to qualify for this deduction. So now let's get started. Let's get excited about our LLC educational program. You're a real estate investor. You can be sued anytime, anywhere, for any reason. Why? Because a lawsuit is a mere allegation of a wrong, okay? And if you're investing in real estate for the long term, you're probably going to get sued at some point in time. Now, one lawsuit, the worst kind of lawsuit, could wipe you out. As an example of that, I have a friend who's a surgeon, and one of his partners, who was also a surgeon, was having a large home built. This was about 8 or 10 years ago. While the large home was being built, he and his family lived in a more modest middle-class home. He drove home from work one day in the midst of a thunderstorm, and upon getting out of his car, right about that exact same moment, a large tree limb from an oak tree from overhead fell and struck him. He was paralyzed as a result. As a result of being paralyzed, he could no longer be a surgeon, and he had a $10 million plus lawsuit. That is the kind of lawsuit that can wipe you out if you don't have the right strategies in place, including a proper asset protection plan. Even if it's not such a big situation as that, even when you win a lawsuit, you get wiped out, you lose. It's expensive. A lot of lawsuits do not provide for payment of attorney's fees through insurance coverage. It's also very distracting and hard to focus on your business. So you want to avoid lawsuits at all costs. Ultimately, the best thing you can do is stop a lawsuit from happening by having the properly structured asset protection strategy in place.
ultimately, and I say this as someone who was formerly a litigator, typically the only people that win in lawsuits are the lawyers. You want to avoid them. Now, why is real estate somewhat of a risky asset? The problem is real estate is, in fact, physical in nature. And what that means is you've got tenants who invite guests over. You can have the UPS guy dropping off packages from Amazon. You can have all kinds of people who go on your property and theoretically can be injured. It's the fact that you've got a property, it's physical in nature. Also, understand this, that the longer you own a property and the more that your equity increases, the more of a target you become. Of course, also, they're subject to many regulations, including interactions with tenants, regulators, contractors. You want to protect yourself. So, of course, number one, you do want to have insurance. But I don't think you should say to yourself, hey, if I have insurance, I can't be subject to a lawsuit or I don't have to worry about it. That's the insurance myth. You should have liability insurance to protect you in the event of, an injury upon the property, but it doesn't protect you from every form of legal dispute. For instance, issues regarding tenants or regulators that deal with tenants, disagreements with investors or joint venturers or partners, disagreements or disputes with general contractors or subcontractors. Environmental issues can be a hassle. All of those things can lead to costly and time-consuming lawsuits. Again, the things that I think are most frequently forgotten about and you want to have a proper asset protection plan in mind are environmental claims, which are generally excluded from insurance coverage, and fair housing violations, even when you're not doing anything or attempting to do anything wrong. Remember, insurance does not pay for the attorney's fees and court costs in these types of uninsured situations. It's not going to protect you from liability claims also that exceed the limit. So oftentimes you have a general liability policy which will give you potentially $1 million of coverage. But what happens in the event of, in my example, the surgeon who's paralyzed in your rental property and the person seeking $10 million in damages? The insurance company is going to cover $1 million, and then unfortunately you're going to be covered with the rest. And that's why you need to have, again, the proper asset protection strategy in place. We're going to show you some strategies that can help you from ever getting a lawsuit instituted in the first place. And you want to avoid creating a too much insurance situation. By the way, our asset protection plan and strategy is going to provide you with some financial privacy, which is a huge part of avoiding lawsuits in the first place. Also, insurance generally is not going to defend you in a costly or time-consuming audit with the IRS, as our program can teach you. Again, insurance does not support tax-saving strategies. We're going to show you about a properly structured LLC with an asset protection plan to protect you from all of these problems, liabilities, and consequences. So let's talk about teaching you the hidden power of limited liability companies to save you thousands of dollars. We're also going to teach you later in this event how you can utilize this program, whether you have a new LLC or you have an existing LLC, maybe with not the best documentations, and show you how you can actually get a company to assist you in filing and establishing your LLC for free. So first thing we got to talk about is an LLC. What is it? Okay, folks, LLC, the official word is limited liability company, is a business entity that's filed under state law. Generally, the owners of a limited liability company are referred to as members, as opposed to in a corporation you might talk about shareholders. So generally, the owners of LLCs are referred to as members. And by virtue of having a limited liability company, you have a shield of asset protection which can be established. Now, there's a secondary consideration that I always try to explain to people because there's a lot of misunderstanding about LLCs. I typically say to a person I've just met and am advising, what kind of business do you have? And they'll say it's an LLC. And my next question will be, well, how is it treated for tax purposes? And I get a blank stare and they say, well, it's an LLC. Unfortunately, that will not answer my question. And this is important for you to understand as we talk about this further during the presentation. An LLC basically is not something that is identified by the Internal Revenue Service. Historically, the Internal Revenue Service dealt with either corporations, whether they're C Corp or S Corp, or partnerships, or we have this thing called a disregarded entity. So let me explain this to you. Since the IRS really does not recognize the LLC as its own sort of different tax entity, we have to understand how the IRS treats it. So when you have a single member LLC, that is one owner owning an LLC. That is called a disregarded entity. That's the default that the IRS will consider, that you have a disregarded entity. What that means is that the owner, the member, reports the income and expenses of the LLC on the owner's tax return. So that's called a disregarded entity. Typically, you have that with one person owning an LLC, and they'll report their income and expenses on their personal tax return. Unless, see, that's the default, unless that owner member elects to have the LLC taxed as either an S Corp or a C Corp. Now, what happens when you have more than one owner? That's called a multi-member LLC. And in a multi-member LLC, meaning more than one owner, it will typically, by default, according to the IRS, be treated as a partnership for tax purposes. So when you have more than one owner, if you have one owner or 40 owners, if you take no action, the IRS will consider the LLC for tax purposes to be treated as a partnership. Unless, again, unless the LLC files documents to indicate that it wants to be treated for tax purposes as either an S corporation or a C corporation. So while I'm talking today about LLCs, I will oftentimes refer to an LLC taxed as a partnership. That's primarily what I will be referring to. There will also be times that I talk about an LLC taxed as a C Corp, for instance. But any time that you're discussing LLCs, you have to understand the tax status of the LLC, because that's as important as the fact that it's an LLC under state law. So let's talk about a properly structured LLC. Ultimately, an LLC is going to give you all the major advantages of other entities, and we're going to talk about them briefly, but avoids the downsides of those. So ultimately, LLCs give you liability protection, giving you basically the ability to not have your personal assets exposed to the claims of creditors of your LLC, just like a corporation. That's the beauty. However, they also give you the wonderful tax advantages of a partnership, a general partnership, which gives you flow-through tax treatment. There are limited partnerships, but they give you really terrible tax consequences. So you don't want to have a limited partnership. Also, when you have an LLC, you can plan to save taxes by identifying ways to avoid the passive loss limitations, which allow you to fully deduct your rental property tax losses against your other income. You know, that's something that you have with a family limited partnership or a limited partnership you would not be able to do, because you can't avoid the passive loss limits when you are an owner of a limited partnership or a family limited partnership. Also, LLCs are not subject to one of the big tax pitfalls that an S Corp has. My dear friend Al always said, what does the S in S Corp stand for? And the answer is that it stinks. The fact of the matter is S Corps are the most litigated and audited entity, because we have to make a determination as to what is the reasonable compensation of the S Corp owners. And you must pay W-2 salaries, which result in additional payment of taxes, FICA and Medicare taxes. It also limits your ability to deduct S Corp losses against other income. There's a lot of pitfalls. I'm going to talk about this a little bit more later, but really avoid S Corps even if you are flipping properties. We're going to talk about that more. You know, these kind of pitfalls for an S Corp do not apply when you have an LLC taxed as a partnership. LLCs are going to give you ultimately all of the legal protections of the corporation and a limited partnership without any of the detriments. Ultimately, they're better than all of these other entity structures. And by the way, there really are no disadvantages to having an LLC taxed as a partnership when you have the proper setup and documentation. Unfortunately, too many people do not have that. So let's talk first of all about the formation state or the state of domicile. Unfortunately, too often I hear about people who have been invited to, I call it a junket, typically to Las Vegas, where some guru in asset protection creates a big strategy, often charging big bucks and suggesting that you should have your entity established in Nevada. Now, why does that do you no good? Well, first of all, if you're investing in Illinois and you have income in Illinois for your LLC, it's subject to tax in Illinois without regard to the fact that there's no income tax in Nevada. Same thing's true for California. If you have California income from real estate, it's going to be subject to tax in the state of California, despite the fact that you have a Nevada domiciled entity. So our advice is that you are going to select the place, the state where you intend to invest the most money in your properties. Ultimately, the reason for this is if a lawsuit is imposed, it's going to be imposed in the state where you own the real estate and the claim is being made. So those state laws are going to occur, and you're not going to get the benefit of potentially Nevada law if you have an LLC with a lawsuit in Illinois. Potentially this can cost you money because you have to register the foreign LLC within the various states if you have this Nevada entity. You don't want to have to register a foreign LLC. So I'm going to talk to you a few more moments, and I'm going to try to get through this as quickly as I can because we're really getting up on it. I'm trying to give you so much information, and I'm so excited about it, but I've got a lot of ground to cover. So let's talk about it this way. You've got three ways to look at this choice of what entity. You look at the legal facet, the tax facet, and the IRS facet. Ultimately, the best structure is going to give you asset protection at the best level while reducing your taxes and reducing the odds of your return being audited by the IRS. The answer to that, when you're a real estate investor, is a limited liability company taxed as a partnership. On the left side, from the legal standpoint, you have liability protection so that your personal assets are protected from the claims of creditors to the LLC. The tax aspect. This is a partnership. This gives you flow-through tax benefits and gives you the lowest tax rates. And under the new tax law I just alluded to, Section 199A gives you that 20% flow-through deduction as a flow-through. And from the IRS standpoint, the IRS audits partnerships much less frequently than they do personal tax returns with Schedule C's or E's, which is what happens if you have an LLC disregarded entity and you're reporting real estate investment and expenses. So what we advise is that you file a Form 1065. Believe it or not, you report the exact same income and deductions as you would on your personal tax return, but the chances of being audited are dramatically reduced. With this superior entity, you're separating really your business activities from your personal activities from both a legal standpoint and a tax standpoint, considering your 1040. So in the future, if you follow this strategy and you have an LLC tax as a partnership, your rental income and expenses are going to be reported on the right-hand side, Form 1065. Now, what happens when you file a Form 1065 is that you also, at the time the return is filed, issue K-1s to the members or the owners, the partners. And the K-1 is kind of like a souped-up W-2. It reports various information which will then be, in essence, imported and included in your tax return, but not on Schedule C or on Schedule E, page 1, where rental properties are. So you're going to be much less likely to be audited. What you're doing is you're making a segregation of income and deductions so that your business income and deductions are not included on your personal return, your Form 1040. Now, when you have this single member LLC, this disregarded entity, if you don't establish a partnership, first of all, and I'm going to talk about veil piercing a little bit more in a few moments, but you are certainly much more likely to have the veil pierced, and as importantly, you're 3 to 4 times more likely to be audited, again, reporting the same income and deductions. So if you're sitting here and you're listening to the presentation and you're thinking to yourself, Well, I don't have a partner. What do I do if I want to file and follow this strategy? Let's talk about it. First of all, if you are married, you're going to file a married filing joint tax return, and you can easily put your spouse as one of the owners of your LLC, and you now have the ability to file a partnership tax return. You know, I always get a wise guy at my live events who will say, you know, I'm not sure that I'd like to be in a partnership with my spouse. And my answer is, you're in a partnership under the law, whether you like it or not, when you got married. So you might as well use that to your advantage. If you're not married, another thing you could do is, in essence, add a member such as a parent or adult child that maybe owns 1%, and we can explain to you how this wouldn't have any tax impact on them. So that, again, you have the ability to file a partnership. Or, and this is the great strategy, you have the ability to create another LLC. But this second LLC, you elect to have treated as a C corporation with you being the owner. Now, what does that give you the ability to do? It now gives you the ability to issue K-1s, one to you as in your individual capacity as being a 98% owner of the partnership, while issuing a second K-1 for 2% issued to this LLC, which is taxed as a C corporation, which will have a separate tax ID number, that is employer identification number, giving you the ability to file a partnership tax return. Beautiful. In addition to this, in our materials, I can't really harp on it too much today, but when you have a C Corp, it gives you the ability to take some substantial non-taxable perks that aren't available to any other flow-through entity. So especially if you're someone who needs to provide for health insurance and is worried about how to be able to deduct those expenses, this is a great strategy for you. Ultimately, if you do decide to pursue this strategy, really you're moving money from one pocket to another, and it gives you the ability to dramatically reduce the chance of an audit. The other thing about getting an LLC set up, especially using the documentation that we're suggesting you utilize, is that now you have the ability to deduct your real estate education or travel to learn about real estate because you've got a separated business entity in place which allows you to make a deduction. By the way, even if you have not yet purchased any real estate, even if in the past you've incurred some expenses but have not yet set up an LLC, we teach you how to be able to report those expenses without increasing the chance of an audit. Now I need to talk about veil piercing. I'm sure many of you have heard the term veil piercing, so that's what we got to talk about. Veil piercing ultimately is a concept that the courts utilize. So the first thing that you need to understand is that once corporations got to be understood by business owners, there were a lot of owners who decided that they, in essence, were going to live their life through their corporation. They'd pay their groceries out of the corporation. They'd pay their kids' private school tuition out of the corporation. They'd buy a boat through the corporation. And so, in essence, run up a bunch of expenses through the corporation, and then for some reason their business, the corporate business, would go south, and they'd have a bunch of debts owed to the bank. And the bank, of course, would want to collect on those debts. And so the owners always thought, well, listen, bank, I have a corporate form, I have liability protection, you can't get at me. So what the courts did is they said, listen, sir, if you have not properly operated your corporation in a business-like capacity, and what that means is that you only use your corporation for business income and expenses, but where you decided, sir, to commingle your personal and business expenses, the court will not give you the benefit of that liability protection. In essence, you have created such a mess for the courts and the creditors that we are going to take away that shield of liability protection. We are going to pierce your veil, and now there is going to be a liability imposed on both your company and your individual assets. So that is what veil piercing is. That's the concept of veil piercing. And what's critical to avoid veil piercing is that you don't do things like commingle business and personal expenses, that you operate your business separate and apart from you, that you don't, in essence, create a circumstance where people don't know where the business ends and your personal life begins. And ultimately, veils are most frequently pierced with newly established businesses with very few owners and limited assets. So oftentimes people say, hey, I'm just getting started. Why do I need to worry about this? This is actually the time that's most critical for you to do this. So the kryptonite that we establish against piercing the veil, in order to give you the asset protection shield, is our proper documents, entity formality with legal documentation to establish that you are not the LLC and the LLC is not you. A couple of things. The most important thing right away when you establish a business, an LLC or any other entity, the number one thing you have to do right away is open up a separate business bank account and exclusively use that bank account for LLC income and LLC expenses, that you don't commingle money. Now understand this, someone always says to me, hey, I need to pay my rent, I need to buy groceries, I got bills to pay. What am I supposed to do? And the answer is actually very simple. You are absolutely allowed to distribute money from the LLC to you personally. What you're allowed to do is cut a check from the LLC's bank account payable to you, John Smith, okay? And you cut a check from the LLC to John Smith. And then you, as John Smith, deposit that in your personal bank account, that money, and then you pay your personal bills. That is segregating personal from business expenses. So you're allowed to distribute money from this LLC tax as a partnership to you personally. But what you don't do is you don't use, in essence, the LLC's bank account to buy your groceries or pay your cable bill at home or pay for your kids' braces. You're allowed to pay for all those things personally simply by making a distribution from the LLC to you personally. So that's the number one thing that you've got to do immediately. Now, here are the other documents that we're going to talk about. What we're showing is, in essence, you don't act as the LLC in your individual capacity. And we're going to establish a system of documentation to show the separation of that. One of the critical things to understand when you own an LLC is anytime you engage in a contract, you need to make sure that the person issuing the contract, if it's a painter, it's issued in the name of your LLC. And then when you sign the contract, in essence, accepting the bid, you print down the name of your LLC, and then you can say by, and if it were me, Bill Knoll, agent. That puts the contractor on notice that you're acting through your LLC and you're acting as an agent and not in your own personal capacity. Again, these documents that I'm going to talk about in a minute or two are actually more important when you are just getting started and have a smaller entity than they are if you've established a large multi-million-dollar business. So, little quick question we always ask, true or false? It's the articles of organization you file in a state, Secretary of State's office. It's the most important document. And I'll avoid the suspense. The answer is absolutely false. The articles of organization are simply the public document that puts the world on notice that you have created an LLC. That's all that it is the only public document. However, the articles of organization do not govern the way your LLC operates or determine who the members or the owners are. So now let's talk about these private documents that we're going to show you how to create that are the most important legal documents in order to have a viable LLC to avoid piercing the veil. The first is an operating agreement. Next, we have what are called minutes of meetings. Third, we have LLC certificate of ownership. And last, we have resolutions. So let's talk about an operating agreement. An operating agreement is the equivalent to bylaws for a corporation. It is what really governs the operations of an LLC. It's the heart and soul of how the LLC is going to be run. So we've created an operating agreement specifically for you as a real estate investor. One time I was at a seminar and a guy stood up and said, you know, most of you people have documents that you could use an LLC to have a donut shop, a transmission repair shop, or an insurance agency. And that's accurate because most documents, whether purchased online or done through a law firm, are going to say the company may operate any legal activity within the state of. And ours is the absolute opposite of that. It's specifically designed for real estate. Our operating agreement has 240 provisions covering every legal facet of real estate investment, which is essential to protect your personal assets. In addition, a properly designed operating agreement should also include tax provisions to support real estate tax saving strategies. And that's something that you will not find in any other operating agreement that you will come across. And in addition, we provide in our operating agreement reference to IRS regulations to ensure that you're in compliance with the IRS. So the operating agreement is the critical foremost document. We're going to talk now about the additional documents that are necessary. First of all, minutes and resolutions. So it's a fact that LLCs are not required by law typically to maintain a record of minutes of meetings. However, almost every state also has a statute which says when considering to pierce the veil, one thing to take into account is, did the company maintain minutes of meetings? So that in essence, you're not required by law to have minutes, but if you choose not to maintain records of minutes of meetings, that it is a factor which favors piercing the veil. So there's no good reason not to maintain minutes, that is, to hold meetings authorizing the company to take certain action. Our next record, other than minutes and resolutions, are membership certificates. This is the equivalent of a stock certificate. So this is, in essence, a piece of paper that demonstrates that you've got this personal property, the membership ownership certificate, again, showing a segregation of you as an owner in your own right as opposed to the LLC. So we're going to give you the ability to create these documents. And as I said already, the last thing that you need to have are resolutions. So resolutions are, in essence, written statements authorizing the LLC to take certain actions without the formality of holding a meeting. Most typically, this is for when you are purchasing or selling properties. All of these documents are really important to establish that you are not the LLC and that the LLC is separate from you in your personal capacity. And without these documents, your LLC can be collapsed, which allows for your personal assets to be exposed to the claims of third parties. Again, when you have a small LLC, this is more something that you've got to worry about. Ultimately, from a tax standpoint, this also gives you a strong position to allow you to deduct your real estate education, your travel, the fact that you're engaging in a business-like and prudent manner, because sometimes IRS agents will call early real estate activities either non-deductible education or non-deductible hobbies. Look, there's lots of disasters that can happen. And what we're trying to do is prevent you from being sued in the first place. Many people have created LLCs with online services. They spend hundreds of dollars, but they lack documentation ultimately needed to protect their personal assets when someone wants to try to pierce the veil. In essence, they don't have an operating agreement. They don't have certificates. They haven't established anything. They've got their name in the public record. Look, don't make these mistakes. Follow our advice. Lots of attorneys and CPAs, they're going to create template-based documents which are not specifically for you as a real estate investor, not going to have tax strategies for real estate investors, and certainly not going to be specifically for you investing in real estate. You'll pay the consequences. You won't have very good documentation. It won't help you defend yourself in an audit. You can pay thousands of dollars in fees. Instead, What are we offering? We're giving you a high quality and low cost solution that gives you the ability to avoid expensive lawyers, but giving you total control. I hope that sounds good to you. I hope you're excited about hearing about our wonderful LLC system. So we're giving you our LLC asset protection system. It's for anyone who's investing in real estate with extraordinary tax strategies. And again, specifically updated for the Tax Reform Act, which passed in 2017. So this will be valid, and I can't imagine they're going to make significant changes to the tax code for another 20 years. So you'll have a powerfully structured LLC shield, all taking into account the new tax law changes, while avoiding adverse side effects, avoiding expensive lawyers, avoiding complexity with the best asset protection system possible, and giving you the most powerful and carefully drafted documents, providing you with a fortress of asset protection. Starting with our superstar document, it's our operating agreement. We call it the Operating Agreement Extraordinaire, OAA. It can be used in all 50 states and the District of Columbia. Again, it's specifically designed for you if you're investing in real estate. You know, most operating agreements might be 10 or 12 pages long of, again, formulaic, any and all activities type of language. We've got 121 pages of absolute gold, including 240 provisions, which take account legal protection, tax provisions, and tax law savings, including references to the changes to the Tax Reform Act, and with total IRS compliance. We're going to simultaneously give you an ironclad legal shield while supporting your maximum tax saving strategies and giving you a great IRS audit defense. We're showing you comprehensive legal provisions with the proper language to prevent disputes from all types of people. So let's take a quick look. I'm going to just kind of flow through some of the headings that we've got here. You know, it's a business plan, how to handle distributions of cash and property, how to handle loans between the members and the LLC, prohibited acts, what happens, death, divorce, incompetency, different exemptions from transfer tax, trade names, member management, outside property managers, etc. Again, these are all provisions. The C Corp as a 2% minority member if you elect to pursue that strategy. All of these are included. So we've got a testimonial here from Lee Parker who says our operating agreement alone is worth $10,000. Here's another testimonial. The LLC Master Machine has the absolute best operating agreement. It's packed full of details that you need to protect yourself and your assets. We find it extremely comprehensive and helpful. That's Kurt and Tanya Kuffner from Minnesota. Plus, we've got our 35 tax provisions supporting our multitude of real estate tax saving strategies. Again, if you look here, we've got partnership tax classification, rents not subject to self-employment tax, the income eligible for our qualified business income deduction, the new IRS Section 199A that gives you the ability to take the 20% pass-through income deduction, that real estate is owned as a trade or a business, making you eligible for that pass-through deduction. And if you notice, in each of these slides, there are these blue items. These are actually tax law citations. Why are these important? I can tell you that I am often asked to represent people in audits, not because my clients get audited, because lots of CPAs I know that as a former litigator, I'm used to dealing in adversarial settings, and I know how to handle myself in an audit. And so here's what I can tell you in an audit. When I work with an auditor, I'm going to present them information in its most usable format, and I'm going to give them citations of the law to make their job easy. The IRS agents are not paid on a contingency. They're not paid to collect extra money. The primary way in which they're evaluated for promotions and raises and bonuses is how fast do they close files. So in my experience, if I make their job of performing their audit easy and being able to support their decisions to their manager, my experience is they generally make my life and that of my client easy. So when you've got these tax law citations, you got to understand these auditors rarely audit people that have real estate investments. They don't know these rules. It can take hours for them to look it up. And the use of our tax law citations in the operating agreement creates a great benefit, again, in the event that you get audited, a powerful audit defense. So all of these are included in our operating agreement. Special tax allocations and provisions that authorize and support, again, deducting your real estate education and travel and out-of-town meals. And that's true just if you're a beginner, if you haven't owned any properties, even if you're setting up an LLC now, but you've paid for classes and training and travel in past years. And this has been a big problem with the IRS. We've solved it using our operating agreement extraordinaire. When you have our legal entity properly structured, and again, making you separate and apart from the LLC. The LLC is not you, and you are not the LLC. It will give you the asset protection that you need. And again, support all of and maximize your tax saving strategies, giving you the most powerful IRS audit defense. Again, how to make and properly report the deductions for your education and travel. So we have another letter here from Adam. He's a beginning investor. He said, with the new system strategy and support, myself and my CPA are confident to fully and safely deduct my real estate education, saving me over $5,800 this year. You know, in the past, the problem was having the time and ability to prepare these comprehensive documents. When I had my separate litigation practice, if someone came to me and asked to hire me to create an operating agreement like this, 120 pages long, 240 provisions, taking into account business activities, tax provisions, IRS compliance, what I would have said to them is, look, I don't know what this is going to take. I'm going to charge you hourly. I'm going to take $5,000 to get started, but honestly, I wouldn't be surprised if it's $9, $10, $12, $15,000 if you want to do this. The fact of the matter is it cannot be done really as a one-off, okay? So now we've created a program where you have access to these documents yourself without needing to pay an attorney to create the documents. Basically, you're going to fill in a few blanks and have the documents created. What you're going to do if you accept our offer to get our LLC Master Machine is you will get directions to our website, and you will put this information into our website. You're going to put the state that is the domicile. You're going to put the date the LLC was established. You're going to put the name of the LLC, and then you're going to put the names of the members in, with the person holding the biggest interest being listed first and the person owning the smallest interest being listed last. So you're going to fill these things in, and then bang, the following documents are automatically going to be generated. Our operating agreement extraordinaire, minutes for a first members meeting, that is in essence the initial formation meeting, minutes of an annual members meeting. We're going to issue membership certificates, and you're going to have access to 14 resolutions, which gives you the ability to authorize activities without holding a formal meeting. Plus, you're also going to have access to a second operating agreement if you decide you want to use the strategy that we explain for having an LLC taxed as a C Corp as a 2% minority member. So you're going to get that second operating agreement for the LLC taxed as a C Corp. Now, you don't need the other documentation, the membership certificates, the meeting minutes, etc. The reason for that is this LLC taxed as a C Corp will never engage in any activities with third parties and will not be subject to lawsuits. So you don't have to worry about any veil piercing with that particular entity. In addition, we're going to show you how you can quickly and automatically add or remove LLC members. Of course, all with the proper language legally to protect you and your family. Instantly generated, giving you the ability to modify or edit the documents without having to pay a lawyer. And as I told you already, it would be thousands of dollars to get an LLC for real estate investors, put together an operating agreement. We're going to show you how to do it for a much more reasonable price. And with the LLC Master Machine Asset Protection System, real empowerment to protect my assets is at my fingertips. It's very simple to understand, and best of all, the legal paperwork is prepared with the Auto Doc Prep software with the push of a submit button. Operating agreement, membership, minutes, membership certificates, resolutions make you legally and IRS compliant instantly. Hands down, the best investment I've made, and that's from John Gonzalez. He's a real estate investor in Colorado. Plus, our superior documents give you the ability to replace the worthless documents of your existing LLC. If you've got sort of the template documents, or maybe you never even got an LLC operating agreement put together because you did it online, didn't know you didn't need it. There's no reinventing the wheel here. In our AutoDoc software, you simply put the date that your LLC was established, print out the new documents, and throw out your old. Like magic, you've transformed a poorly designed LLC with limited to no asset protection features into a powerful vehicle of wealth protection, giving you the ability to save thousands of dollars. Of course, now that you've got these proper documents, this will prevent the LLC from being collapsed through a claim of veil piercing or the IRS attempting to disallow deductions for real estate education, training, even if you're just getting started. This could cost you thousands of dollars, all prevented using our documentation. Besides giving you this impenetrable protection, remember, these documents are not public documents. They're maintained by you as internal governance documents. The only public document is the articles of organization that are filed. So you don't have to present these documents to the public unless you choose to and you need to. So let's talk about that now. At your option, you can, in essence, disclose these things where someone is attempting to make a wrongful claim against your LLC. And, you know, ultimately, this is the type of thing that makes stopping a lawsuit in its tracks possible. Even if you don't show the documents, we're going to give you an example of how to use these documents. So we've got a thing we call it the power attorney letter. So you need to understand this first. We've got a student of ours, Natasha, and she had hired a general contractor to fix up a home that she was working on, and she had paid him a bunch of money. He hadn't finished the job. He submitted a bill to her for an additional $11,000, and she said, hey, first of all, you didn't do the current stuff properly. You haven't fixed these 15 things, and those things got to be fixed before I'm going to pay you any more money. And so what happened was she got what I call the brother-in-law letter. That is, it seems these days everyone has a friend, family member, cousin who's an attorney, and they always come to us and they say like, hey, you know, so-and-so owes me money. And I know if they get a letter from you written on your legal letterhead, it's going to scare them to kingdom come, and they're going to pay me. Okay, and so I can tell you, because I've gotten these requests myself, and what I always say is, listen, I will write the letter for you, and it's mostly done to get this person off my back who's a friend or a family member, and I'll say, I'll write the letter for you, but I am not representing you in court, and I can tell you it's probably not going to work, but I don't mind putting a letter together. So Natasha got the brother-in-law letter, pay $11,000 or else we're going to sue you. And then with our assistance, we helped Natasha craft this response. So this is her response to the attorney who's made a demand for $11,000. Dear attorney, PPA, that's Preferred Property Associates, LLC, engage your client to do contract work on one of PPA's properties. According to the terms of the contractor agreement with PPA, LLC, the contractor did not do a satisfactory job and therefore is not being paid the balance. So Al, my buddy, he loved battleships. So here we got torpedoes. So our first torpedo in the letter says, all agreements, correspondence, work orders, and company resolutions with the contractor were fully executed and done in the full legal name of PPA LLC as a separate state statutory entity. Next torpedo. PPA LLC has totally complied with all necessary entity formalities, including, but not limited to, a comprehensive operating agreement, minutes of meetings, resolutions, certificates of ownership units, all fully executed, under seal, notarized, and on file. Next torpedo. All LLC tax returns have been timely and properly filed with the appropriate taxing authorities with total compliance. And the fourth torpedo. Here we go. You sunk my battleship. Also, the properties are heavily encumbered with debt, leaving negative equity. So, as a result, what happened? Natasha never heard back. And I can tell you why, because I've had this discussion with people. I'm sure that upon receiving the letter, the attorney told his friend slash alleged client, hey, this lady understands the system, and you're going to have a real tough time pursuing a lawsuit and winning in this case. So understand that, number one. And number two, it's possible that even if you win a judgment against the LLC, you're never going to be able to collect it because, according to her, there are no assets available. See, the thing is, a lot of times people don't understand that just because you win a lawsuit in a commercial case doesn't mean you get paid. See, a judgment is entered. That means an order to pay money. And then in order to actually enforce the judgment, the attorney has to find assets to levy or garnish so that you could actually get paid. So winning a judgment and actually getting paid are two very different things, and you have to be aware of that. See, once you understand our system, and again, I'm not suggesting that you do anything illegal, unethical, or fraudulent, but what I am suggesting is if you understand how to protect yourself under the legal system that our country allows you to pursue, and by the way, the guy in the White House has used it to his advantage, as I'm sure you've read in thousands of lawsuits, you certainly can avoid a lot of claims which are really what the courts would call not meritorious. As a result, as I said, Natasha never heard back from the attorney. Again, Natasha saved $11,000. So I hope you guys are having a good time learning about this. It's certainly exciting for me, and I'm enjoying myself. And we're a little bit behind schedule, so I'm going to keep trying to roll through this. I'm going to jump ahead here. I want to talk about lawyers. The truth about most lawyers, just be aware of these things because when possible, you have to hire them, but you certainly want to try to avoid it. So the truth about most lawyers, most are not comfortable with numbers, which is why they decided to go to law school. The vast, vast majority of lawyers are never trained in accounting. Almost all lawyers maybe took one class on how to read financial statements, but many lawyers never even took a class with regard to taxes. Lawyers try to intimidate their clients using legal terms, and they don't tell you that legal terms were created to take really power out of the layman's hands, of the client's hands, by using this specialized language so that you think that you cannot handle a lot of things yourself, and that's absolutely false. Also, when you're hiring a lawyer for some kind of dispute which has nothing to do with some kind of personal injury, they generally bill hourly, and typically they extend the case for some period of time until they earn a fee. And the fact of the matter is, in these types of cases, these non-personal injury claim cases where you're hiring an attorney, they're not going to work on a contingency fee for a claim. And generally, I can tell you this, and this is one of the reasons I stopped litigating. The fact of the matter is, the best advice a lot of times an attorney can give is don't even start a lawsuit. And as I said previously, winning a judgment and collecting money are two entirely different things. Look, ultimately, even when you win a lawsuit, oftentimes you lose. It costs you money. It's a huge waste of time, and it's emotional draining. So use these documentations to try to create a situation where no one even wants to initiate a lawsuit against you. Plus, we're going to show you how to save hundreds of dollars in avoiding foreign entity registrations. We have a testimonial here from Vicky saying, with your privacy strategy, I saved $1,700 not having to file foreign entity registrations. We're going to show you the 16 entity formalities included to show you how to avoid piercing the veil. Again, these entity formalities are critical, and they're all included in our documentation. We're also going to show you how to transfer property that you own in your own name individually out of your own name and into an LLC. With obviously putting it in the LLC gives you asset protection while avoiding transfer taxes, while avoiding the mortgage due on sale clause, and other IRS costly traps. We're going to show you how to do a special tax allocation so that you can have a 2% or a 1% partner who doesn't have any tax implications as a result, but gives you the ability to file a partnership tax return, all with complete tax law support that the vast majority of CPAs do not have experience with. And by the way, I don't want to badmouth CPAs. I'm a CPA myself. But here's what I can tell you. The vast majority of CPAs, if they have sort of a general tax practice, will not have much experience, if any, in dealing with real estate investors. Think about this. What percentage of the population invests in real estate? I can tell you it's well under 0.5%. Therefore, if you have a general practice, even if you have a few people that have a rental property here and there, the fact of the matter is you can't devote the time and knowledge necessary to understand real estate tax strategies as someone who has a lot of clients handling real estate. So you can't just rely on, oh, my CPA said. We're also going to show you how to, the ability to extract tax-free cash out of your LLC and avoid W-2 salaries, which are fully supported by our tax law citations. Our materials are going to show you the 7 legal issues and 4 tax issues you have to know to set up your LLC, and when, why, and how to use Wyoming as the domicile or formation state, even if your property is not in Wyoming, with many more precious gems to protect you and your family. You're also going to have access to our manual that also has audio files, and I'm the one who is speaking in the audio files, and you'll have access to either CDs, or these days no one seems to use CDs, so we also give you MP3 files to download. So you can listen to me while you're exercising, at the gym, driving in the car, whatever. Hopefully, you'll find me as engaging on the audio's instructions as you are today. Our materials are written in plain English, which is different from the language that lawyers use. And again, that's a thing that lawyers do to kind of intimidate their client. When you understand English, and our documents are written certainly for someone like you to understand, you get to be the captain of your real estate ship. You don't have to rely on an attorney to draft, for instance, meeting minutes every year. You also, by using these documents, demonstrate the tricks played by lawyers. Ultimately what you're doing is you're putting the control in your hands. You get to decide. Now, there are times that you need to get a lawyer involved, but it shouldn't be all that frequently. We've got great ease of use features in our materials, detailed table of contents, checklists, and cross-references from text to audio and audio to text. Here's a testimonial. I read the new online text and took very little time listening to the audio, where you're funny and on the money. Excellent. You're not going to get a system like this from any law firm, a CPA firm. This is the one place that this is offered. By the way, we do not offer a separate website for sales. If you want to purchase this product, you do it through the webinar now. Please, don't try to reach out to me by phone and say, I need to ask you some questions. This is how you acquire our programs. If you want to ask questions and you bought the program, then you can speak to me. So here's another testimony. I purchased from just about all the so-called big name asset protection speakers out there. And I tell you, your courses are not close as to quality content and ease of use. Thank you for saving me. And this is Muriel Tomei. Unfortunately, her picture got cut, or her name got cut off. Another testimonial. Thank you. I purchased an LLC package from an asset protection expert. Great guy with some good material, but unlike yours, it was not real estate focused, but he did hit my wallet. Our system, the LLC Master Machine system, is good for anyone investing in real estate, rentals, apartments, REOs, you're doing wholesaling, flipping, real estate lending, new construction, condo conversions. Really, if you're a veteran, a longtime investor, or if you're brand new and getting started, all of these documents will be the most useful documents to protecting you. Here's another testimonial from Rihanna. I filled out all my paperwork online in just a few seconds, and your instructions are very clear and easy to follow. And I can listen to the audio portions while driving. I have great confidence I am well protected from both lawsuits and the IRS. I'm going to tell you now about customer service, which is, we're not going to give you this program, give you access to this program, and say, hey, you're on your own. Good luck. You're going to have access to me and to Al's daughter, Janine, to email questions about getting your LLC set up. Basically, what happens is you will have a contact email for Janine, Al's daughter, And if you have a question for her, like how do I get access to the audio CDs, she'll respond to you. But if you have more of a technical question, such as I have this LLC set up and I've got 2 properties that I want to transfer into the LLC, and I heard from my brother that this is going to be a problem because something that's more technical in nature, Janine forwards your emails to me and then I answer them. Usually they get answered within a few hours. Certainly they're answered within a day when I get them during business hours. So you're not on your own with this system. You're going to have access to ask us questions. And again, I will be replying to any questions that you have about implementing this LLC system and the tax questions related to its implementation. Again, we're giving you this email support. Here's a testimonial from another fellow. You have the best email response system in the country, more so than any other national speaker. And this is Frank Chen, who runs the RIA Club. Another testimonial from a recent student. I purchased the LLC Master Machine Kit. The really impressive part of the subscription is the support. I've had several questions since my purchase. Bill and Janine have been amazing. They not only answer all my questions, but answer them very detailed and quickly, most often the same day. The package is definitely money well spent. Again, Saul Klopper, who is a realtor. Another benefit, of course, you are eligible to share your LLC documentation with either your attorney or your CPA to allow them to assist you. What they're not allowed to do is copy the documents and use it with their other clients, but certainly they can aid you in implementing the system also. So what do you think all this would be worth? You know, the LLC documentation, our VIP benefits, access to me through our email customer service support for implementation. Look, you're going to get a certificate proving you've purchased the program. You know, ordinarily, we charge $1,395 for the LLC Master Machine system by itself without the benefits and the support, with a total value of $2,395. But we're not going to charge you that today. I think $1,495 sounds a lot more reasonable, especially when you realize that even if you go online to one of these online service providers, if you decide that you want an operating agreement, membership certificates, minutes, etc., as you should, you're probably looking at spending $840 is what I've been told by other people. If you compare our fee to the thousands of dollars that you can save by avoiding lawsuits, stopping legal fees, avoiding judgments, imposition of judgments in lost business, and not having to deal with the time and aggravation of an attorney hassling you every year to update your minutes. Think about the savings we already talked about. Adam saved $5,800 because he was confident to deduct his real estate, travel, and education. Natasha avoided a lawsuit, didn't have to hire an attorney, didn't have to pay $11,000 that someone said she was owed. Vicky avoided making a foreign entity registration and saved $1,700. You can, of course, invest these savings in real estate, an IRA, your lifestyle. Of course, the acquisition of our real estate master machine protection system is fully deductible, and we've got a tax law citation for you. How about this? The price, $1,095. You're not going to beat this anywhere, folks. So let's talk some more. The distinction of this system from other courses, it's an asset protection system with documents that you're going to be able to use with meticulous detail, but only for real estate investors, protecting you from all kinds of legal actions. By the way, folks, one thing I want to caution against, you cannot use this documentation if you're intending to invest with funds from a self-directed IRA. Please don't do that, because you would be doing what's called a prohibited transaction. So please don't purchase these documents if you're intending to make investments through a self-directed IRA. Here's another testimonial from Jim McGinnis. I'm so impressed with the extent and thoroughness that's evident in your materials. You've left no stone unturned. It had cost a fortune in attorney and CPA fees to come up with anything even close. How about a couple more bonuses? Hey, we are going to give you access to a company that will set up your LLCs in any state, no charge, so long as you hire them to be the registered agent. And you want someone to be the registered agent, not you, so that you're not on the public record. Our next bonus, you're going to get an additional 6 months email access. That means you're going to get 1 year of access to be able to ask questions of me and Janine on how to implement your LLC system. Our next bonus, a report on subject to mortgages, giving you all of the tax and financial aspects. Ultimately, our subject to report includes legal, tax, investment, and financing aspects of subject to mortgages. In how you can do that anywhere else, giving you all the ability to write off your deductions, even if you don't get a 1098 mortgage interest statement with your name on it. That's a $500 value. You got to be one of the first 10 to get that. So now I want to jump ahead to our last bonus that we're going to give to you. Again, if you purchase our program now on this webinar, it's our Power Elite Trust. It's not like any other trust. Our Power Elite Trust is really a combination of 3 trusts in one. Number one, it's a family legacy trust. In essence, it's a way to avoid probate, so that if you're incapacitated, you have someone who can administer your assets. In essence, you transfer your assets to a trust without going through probate, without dealing with heirs, ex-spouses, gold-digging spouses. Basically, this is a trust for your family's benefit in lieu of a will. So that's part one, while avoiding probate. Second, it's a privacy trust. What you're going to do is you're going to put, this now is for your personal assets. You're going to put your personal assets into this trust. And by the way, when you establish a trust like this, you're not going to name it the Bill Null Trust. You're going to come up with a name like the Blue Mountain Trust, which has nothing to do with you, and you don't live on a Blue Mountain, because then it's very difficult for people to determine what the nature of your assets are. Remember, no one wants to sue someone that doesn't have any money. If your assets aren't on the public record, you become much less likely to have a lawsuit asserted against you. So we're going to create this privacy trust, and your personal assets are going to be titled, on my example, the Blue Mountain Trust. And lastly, this is an asset protection trust with special provisions which shield you from claims of third-party creditors in the event that you're sued personally, in your personal capacity. We've already protected you in the event that your LLC is sued. So once you've got this trust, the Power Elite Trust, in place, what types of assets do you have owned by the trust? Well, number one, you can have your shares, your membership units in your LLC or other investments. You can certainly have your primary residence or a vacation home held by your trust. If you've got a bank account, a brokerage account, life insurance, collectibles, anything like that can be held by our Power Elite Trust, making it nearly impossible for third-party claims to be made against your personal assets. Remember, these assets do have value and they can be subject to probate, but not when you've established our Power Elite Trust. That protects you while giving you total control. Look, this is an irrevocable trust. What an irrevocable trust means is that once you put the assets in the trust, they can't be revoked. Now, there's a caveat. You actually can revoke an irrevocable trust, and we've got documentation which would allow for it. Basically, you can revoke an irrevocable trust when all the beneficiaries consent to the revocation. So the example I give is, I've got this Power Elite Trust, and I decide for some reason that I no longer want to have my assets held by it. So I go to my son, Freddie, and he's, 25 and always been trouble, and I say, hey, Freddie, I want to revoke my trust, and, you're one of my 3 kids who are contingent beneficiaries, and I need you to consent to this. And Freddie goes, well, Dad, I don't feel like doing that. So I say, listen, Freddie, that's okay. You don't need to do that. By the way, did I tell you about the power of appointment that's included in the trust? And what that does is, although I'm not allowed to revoke the trust, I am actually allowed to change the contingent beneficiary. So I'm going to name your brother and sister, and you're going to be out. And then all of a sudden, Freddie says, okay, Dad, I guess I can agree to revoke the trust. So even though theoretically it's irrevocable, it can be revoked. Secondarily, this is a life estate trust. In essence, that means this is for your benefit use. Income is for you during your lifetime and that of your spouse. Lastly, it's a grantor trust. And what that means, in essence, is that this trust, although it exists to protect your assets, is invisible to the IRS. There are no IRS consequences as a result of having this trust. You'll file your tax return as you always have. Our Power Elite Trust gives you the best of all worlds. It's probate avoidance. It's impossible to contest. It gives you trust managing, privacy, asset protection with no negative tax consequences. We actually give you access to 2 different trusts as part of our bonus. Again, if you buy the program during the webinar today, one of the trusts is for people who are married, and then we have a second trust established for someone who's not married. We have a comprehensive instruction guide and basically fill in the blank instructions showing you how to fill in the documents as you complete the trust. When you combine our Power Elite Trust with our properly structured LLC using the LLC Master Machine Asset Protection System, you have a gigantic fortress of asset protection. Remember, protecting your assets in your LLC and claims of third parties against your LLC that they cannot make against your personal assets, and then also creating a claim through the trust so that if someone were to sue you individually and you have all your assets in trust, they cannot make a claim to your assets there. Now remember, these things are only valid if they're set up before a claim arises, before you know that a lawsuit could occur. Once you know that a lawsuit could occur, then you're acting in what's called a fraudulent transaction, and it'll be overturned. So if you want to use these strategies, you got to do it now. You can't wait until the mistake has happened. Our Power Elite Trust, law firms charge $3,000. We're going to give it to you as part of our package, again, if you order today only. So look at what you're getting with our LLC program. You're obviously getting the LLC Master Machine Asset Protection System. You're going to get a free LLC setup for any LLC, so long as you hire the company to be the registered agent. You're going to get a total of 1 year's email support through our email support program. You're going to get the Subject to report. You're going to get the Power Elite Trust. That's $7,000 in value, all today on this webinar, now only. Look, you can kill 2 birds with 1 stone when you use our updated LLC system. You get the legal protection you've always needed, and you're going to take advantage of both the old sections that benefited real estate investors and the new sections, the new Section 199A pass-through 20% deduction. You can kill 2 birds with 1 stone, getting our LLC program now, specifically taking into account tax. Hey, look at this. We got a final coupon, $100 off. We're going to sell this program for $995. For those of you who've listened, I want to thank you. I hope that you felt like you've learned something here. Please do not try to call me by phone if you haven't purchased the program. I do not accept calls from people about should I buy this program. You know, you've got to make a decision based on the presentation today. If you do buy the program, however, of course, you'll have access to email me about implementing all of the LLC strategies and all of the other materials that I've described today. I'd like to thank you for taking the time to listen to me. I hope you can tell by my voice how excited I am and how using our LLC Master Machine Asset Protection System can put you on the path to these dramatic tax savings. Remember, there's a limited supply of these. And again, I want to thank you for listening to me, and I want to wish you great investing success.